Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings and hopefully not fall asleep in the process. Today we're diving into the financial world of Unite Acquisition 2 Corp, a company that, well, is trying to find a company to buy. Think of it as corporate speed dating, but with potentially billions of dollars at stake. First, a quick heads up. As always, we're looking at what the company thinks will happen, but like weather forecasts, these predictions aren't always right. Things can change, so keep that in mind. So what exactly is Unite Acquisition 2? Basically, it's a blank check or shell company. That means it was created with the sole purpose of merging with or acquiring another company. It has no real business of its own right now. The goal is to find a private company that wants to become publicly traded without going through the hassle of a traditional IPO or initial public offering. When Unite Acquisition 2 looks for a company to buy, it considers things like growth potential, how well the target company stacks up against its competition, and the quality of its management. They're also looking at how much cash the target needs and whether they can actually get their hands on that business. But it's not an easy job. There's a lot of competition from bigger, richer companies doing the same thing. Now, let's talk about something a little unexpected: cybersecurity. The company admits they don't really have a strong system in place to protect themselves from online threats. This isn't a huge deal right now because they don't really do much, but if they buy a company, this becomes a serious issue they'll need to fix fast. Basically, their plan is if and when the company completes a merger or other acquisition, then they will start worrying about it. Seems a little too late to me. Here's a bit of a head scratcher. As of June, the company says there were no outside holders of their stock. This means the company is tightly held, likely by a small group of insiders. As of the date of this report, however, there were 5 million common stock issued. Here's what you need to know. There is no public market for Unite Acquisition 2 stock right now. You can't just go out and buy it on the stock exchange. That's because they're still looking for a business to combine with. That might change if they find a target and complete a deal. The company doesn't have any employees, apart from its management, and doesn't expect that to change anytime soon. It is a shell after all. The company has one officer and director, Mr. Nathan Pereira, and he's got other jobs too. He's a lawyer and that takes up most of his time. Until a deal is found, he won't be allocating much time to the company. Finding a company to buy and actually completing the deal is a costly business. Legal fees, accountants, and other advisors all need to be paid. Unite Acquisition 2 doesn't really know how much this will cost yet. It depends on how long it takes, where the target company is, and how complex the deal is. The filing admits there isn't any need for critical accounting estimates. That's because the company barely does anything. Since inception, the company has not had active operations, so there is nothing to discuss. Alright, let's dive into the numbers. This is where things get interesting, or at least as interesting as they can be for a company with no real operations. As of the end of last year, Unite Acquisition 2 had about $29,000 in cash. That's up from just $380 the year before. So they're not exactly swimming in money, but they're not broke either. They do need to find a target company though. Now here's the other side of the coin. They owe about $286,000 in liabilities, mostly to related parties. That's a big jump from the $11,000 they owed the previous year. This means their debts are growing faster than their assets. That's not ideal. The company lost $145,000 last year. That's compared to about $84,000 the year before. Their expenses are also growing. To summarize cash flow, the company is losing money on its core business activities, so it needs to get money from the outside. Unite Acquisition 2 is considered an emerging growth company as this allows them to get away with reporting less information. Also, their auditors are unsure if the company can continue to operate. It's one of the first things that the report mentions. The company entered an unsecured promissory note with one of its affiliates, entities they are related to, where they received $275,000, which was mostly used to pay off the note payable stockholder, related party payable, other accrued expenses, and general expenses. Think of this as shifting money from one pocket to the other. This is not necessarily a bad sign. Here's a quick look at how much they're paying their accountants. They spent about $50,000 last year for auditing and other services. In the end, it is worth it. The company's officers doesn't hold any shares in the business. The company states that the director might have conflicts of interest because he is involved with blank check companies. The director has other related entities and will have to use good faith in the event of a conflict of interest. So now, what do I think? Unite Acquisition 2 is in a tough spot. It is clear they don't have many assets. They also don't have any prospects for a real revenue, which makes their ability to continue very questionable. The company mentions being involved with Lucius Partners, but it is unclear how involved they are, as they state no formal agreement exists. The primary thing that is keeping this company going is debt, a substantial amount too. The debt is mostly owed to affiliate companies, which in some ways makes sense, but also seems bad. The biggest risk is whether they can find a good company to merge with. Their success depends on it. The cybersecurity risks are concerning for any future prospects and suggest a reactive approach to important risks that many modern businesses see as an obvious thing to worry about. Overall, Unite Acquisition 2 is a risky bet. If they can find a great target company, it could pay off, but there are a lot of challenges ahead and I don't see clear prospects for such a situation. Thanks for watching. If you found this helpful, give it a like, leave a comment and subscribe for more corporate deep dives.